18,070. Andrew Holland is with us, Chief Executive Officer of Avendus Alternate Strategies. He's a market master of the day. Andrew, great to have you with us here. Thank you very much for your time. Higher or lower? I mean, I think it's that kind of a binary question because, the question on lower comes from the fact that at higher levels, there is consistent selling. Foreigners have been sellers all through this year, which is all of 3 weeks or so. And on the upside, one can also make the case that there is not really very much wrong with the market per se. Which way would you go, Andrew? I'm talking about the near to medium term.
Yeah, no, it's. I think it's a little bit confusing, Prashant, because you've kind of nailed the part where there's optimism and a bit of pessimism as well. I mean, on the reopening of China. We saw some GDP data the other day showing, last year was around 3% and the last quarter was around 2.7%, if I remember correctly. And that's, those figures are, despite the kind of, the shutdowns that they have. So obviously now the expectation is that, growth will recover very quickly. And there'll be a lot of spending by consumers as they, manage to get out, as we've seen elsewhere in the world and here in India too. So that GDP growth could be nearer to 5% this year. Therefore, it's a cheap market. And, whilst we were all talking last year about how China is not so good and India's, shining because of that, that reverse thinking is on the way. And that's why we're seeing more flows go towards China. Some taken out of India because of that. So, that's obviously, hitting what the FIIs are thinking in terms of their views on India in the shorter term, which is putting the pressure on the selling. On the upside, you're getting markets which are being supported globally. And, one of the things which is I'm trying to work through, Prashant, is I'm sure you're hearing from Davos too, all the people saying it's going to be a recession globally, and we're not against that. But if I look at the data coming out of Europe, where it's been actually a very mild winter, and there's, in fact, supplies are, more than adequate now. And if I look at the UK, where, retail sales over Christmas was very strong, house prices actually rose over the past month. What if we're wrong? What if there's not a global recession and actually it's really just a mild slowdown? What does that mean in terms of growth? And I think that's what the market's liking, that part of it in terms of the growth, which is pushing up European markets as well as the US. But then, when you look forward on that, you're going to have probably higher commodity prices because of China opening. And you'll probably have the Fed being, staying a little bit longer than we expect. So I think those are going to be the push-pull factors in terms of the markets over the next few months. And I think we're going to just be in a bit of a trading range, unfortunately.
All right, we're going to be in a trading range. By the way, just a couple of more details on ICICI Lombard. That's actually the big loser in the broader markets, down almost 5%. Now, of course, we do know that the premium growth was on the weaker side this time. The investment income was lower, and that dragged the profit growth for the company. But, Motilal Oswal has put out a note where they put out some highlights from the management commentary. And the commentary is also on the weaker side, where they mentioned that the competitive intensity remains very high, especially in the motor segment. And that's due to the passenger car category. So ICICI Lombard, not just numbers are weak, but commentary is also quite cautious. Andrew, hi, good morning. How are you feeling about India now? Do you think this resilience that we've seen all of last year, the outperformance, is something that can continue? And, how are you positioned? What's the asset allocation strategy within India in 2023?
Well, in fact, we're more constructive about markets globally going into this year. Yes, there could be, we think when we spoke last time, there's been a bottoming out process. We think that might continue. If I'm just, correcting what I'm saying, that, the global economy, is not as bad as maybe we were expecting, then obviously, there might be thoughts around stagflation at some point over the next quarter. So I still think, there's some downside to markets. In the shorter term. But I think once the Fed goes on hold, then I think the whole play on emerging markets and growth will continue to to come through a lot stronger. I do think, though, that there's cheaper markets out there than India, and I think that will probably have, at least for the first half, whilst we might rise because we'll get flows, I think the flows will go to other countries, as we've been seeing, like Korea and China and Taiwan over the past few months. So we might underperform, but it doesn't necessarily mean that we'll go down as a market. Unless global markets take a hit because of worries over many different things, including stagflation.
Hi, Andrew. Well, so after a good 2022, maybe some bit of consolidation, maybe flows go to other cheaper markets. Worst case scenario, what does Nifty go down to?
No, so it depends on obviously what the global market's going to move to. But I think whichever way I look at it, if the markets fall 5-10% globally, then I think we'd be half of that. I think the resilience is still there. So unless there's any shocks in the budget, which we're not expecting, then we'll continue to grind higher over a longer period. And I think if I was to think of where Nifty might be in terms of from where we are today, if it follows in line with earnings growth, which we're expecting anywhere between 10 to 15% growth, then I think that's probably where we'll end up by the end of the year.
Andrew, give us some sort of broad ways to think about trading ideas at this point, because I'm assuming that you don't have a firm conviction of which way the market heads, so you trade around, and you can do that in the fund. So just give us a sense of what you're doing or what you want to do in an environment like this.
So I think, Prashant, what you have to think about is the very near term and what are the catalysts. And I think the catalyst is obviously going to be a Fed going on hold, and when you think that will be. We think it's going to be in the first quarter of this calendar year. So if that's the case, then I would think that growth stocks in the US or tech stocks in the US will probably have a push higher from where we are today. I'm not saying that some of the individual stocks might not have problems, but I think tech stocks in by and large will move higher, and I think that's probably the tailwind RIT stocks need, to push higher over the first quarter. And I think that's what. So if I'm thinking about the kind of trades, then that's a trade I would want to be on the long side, and alongside that would obviously be the reopening of China. And we're already starting to see commodity prices starting to rise, and obviously analysts will, as we've seen today, will start upgrading forecasts, for the metal pack going forward as well. So those are two kind of long trades, and I'd probably just offset that with maybe kind of thinking about where I would want to short, and obviously higher commodity prices are going to lead to sectors like paints and autos, again, being under pressure in the very short term.
All right. So you're saying that go long on the IT stocks, right, in India?
I'm saying if that's the view of you, my view is that that's what's going to, the Fed's going to play out, and that's a more shorter term trade, yeah.
Okay, that's a shorter term trade. Got it. The other space I wanted to talk to you about was private capex. We just had a note that we put out from Bank of America's BofA Securities, where they mentioned that government capex had picked up until now, but this is going to be the year when private capex picks up in a big way, because the government is opening up a lot of monopolies to attract both private as well as government capex. If that is the case, who do you see as the big beneficiaries? Will it be cement stocks? Will it be infrastructure names? L&T is at a record high as well. How do you play this theme?
It's something we talked about, Sonia, for most of last year with you, in that we do expect the global recovery to be from a global capex cycle picking up, and there's two areas which are definitely going to receive a lot of expenditure, both from government and private companies. Is going to be renewables and defence. So those two, are going to play out throughout, the many years. In terms of kind of normal kind of capex, yes, you're going to have the government spending on roads, bridges, and so forth. But I think it's the areas where there's been a security problem in terms of supply, where you're going to see a lot more manufacturing come into India, and that lends itself to other parts of the kind of industrials. So the kind of Siemens, the ABBs of this world, I think will garner more contracts going forward, and I think you've seen that in terms of the share prices rising over the past year or so, and I think that will continue. So I think it's good that there's a lot of capex coming from the private companies, and I think the PLI is going to help. And I'm just looking through some stats in that whilst exports are falling, electronics are picking up, and I think that's going to be a big area for India if they can grab the opportunity in electronics going forward, not just to meet the domestic demand, but also for exports going forward. So I think that's going to be a big theme. So whilst I'm saying that the index might be in a short-term trading range, I think there's going to be the themes that play out this year, and that's where you're going to make the big money.
Okay, well, thanks a lot for joining in, Andrew. Have a great 2023. We'll keep chatting with you through the course of the year, but thanks for joining us on the channel today. Moving on.